Now, the seizure in the credit markets, the fact that credit has just dried up, well, let's just remember, well, I'm going to just continue with mergers and acquisitions activities. I'm going to find out how bad is the M&A market right now. Roger Aguinaldo is the CEO and the publisher of Mergers and Acquisition Advisors. Roger, it's no secret. Welcome, first of all. There's no secret that the credit crunch has hurt companies' ability or banks' ability to finance takeovers and transactions. How bad is it really?
Well, it's actually very bad, especially for the big transactions. You don't have the credit markets there for liquidity to borrow extra funds to acquire these companies. The private equity companies are not in the market anymore. Banks being squeezed aren't lending to each other, so there's not a lot of acquisition debt to make these deals happen.
So what kinds of deals are happening? Is it more distressed situations, companies having to recapitalize? Is it basically fix what's broken?
Well, I think that's where it is. I mean, M&A happens whether you want them to happen or don't for a variety of reasons beyond just financial or getting additional money into a company. An owner may be selling, for instance. Strategic acquirers are there. They have amassed a lot of cash over the past few years, and valuations have come down a bit, or quite a bit, in the stock market, as you can see. So you're seeing a number of strategic acquisitions and investments happening. Distressed, yes, and those are all the bank financial mergers and acquisitions that happened over the last couple of weeks. Those were all distressed investing and turnarounds.
So let me ask you, if that's the case, what do you see for the rest of the year? Are we going to be like flatlining all the way to what, 2009?
Well, I mean, flatlining is a strong term. I think we are down year over year from last year about 30%. In the amount of deals being done in particular sectors. Financials are still going to see a lot of mergers and acquisitions. There are a number of weak companies, weak financial institutions out there that need to be acquired. So that
sounds like shotgun wedding might be an appropriate term.
Right. Well, you've seen that over the past few weeks, so you're going to see more of those out there.
All right, Rogers, just stay with us. We need to take a commercial break. And also, just to recap some headlines crossing the Bloomberg terminal, this has to do with NASDAQ OMX. It is going to replace Dillard's in the S&P 500. The stocks are moving in after-hours trading. And coming up next, we're going to try to go to the CEOs of the biggest companies in the U.S. Are they as pessimistic as consumers? The Business Council, it releases its survey every half year. The latest results are due out in just a couple of minutes, and we'll bring them to you right after this break. Now, let's get some reaction to what you've been listening to. This has been the Business Council press conference. James McInerney, he is the CEO and chairman of Boeing, along with Jim Owens, the CEO of Caterpillar. Still with me is Roger Aguinaldo, the CEO of Mergers and Acquisitions Advisors. Roger, you were listening in to the conference. They talked about how they don't expect growth much more than 2% for 2009, significantly deteriorating confidence in the near term. But they did mention, at least Jim Owen of Caterpillar, he said he's looking beyond that for new productivity, for new types of R&D that are going to yield new products. Is that what you're seeing in the merger and acquisition when people talk about why they want new business?
Yeah, well, just to give a comment on the survey itself, it's funny when all the news is bad, you ask them a survey, and of course they're going to say all the news is bad. So you have to look at the survey and see where it's looking, and they did mention it is in the short term. Now, in the M&A space, that's an opportunity, especially with turnarounds and distress. If you're an investor, if you have cash, if you are a company, it has cash, and you're looking to make that strategic acquisition, now perhaps may be a good time to do that because of the lower valuations, if you have the cash. Now, if you don't have the cash, you need to go to the bank. That's where the trouble comes, because there's a crisis in the financial system. The banks right now aren't lending except for the small middle market, lower middle market transactions.
Well, it's interesting you say the banks aren't lending because, for example, I believe, what is it, Altria's attempted acquisition of UST, U.S. Tobacco, that's been put on hold. You've got Dow Chemical trying to close the Roman Haas deal. Do you think that those kinds of deals are going to get done, or are they're just being postponed, or are they really off the table?
At this point, they're off the table. I mean, if you can't close the deal, if you don't have the money at the closing table, you can't close the deal. It's like going to buy your home and you don't have the bank with you with the other 80% of the money, you only have the 20%, you're not going to be able to close the deal. Same thing with the merger and acquisition. If the companies are going there and they don't have the money from any source, Now, this is where creativity comes in the M&A space. If the banks aren't lending or the U.S. banks aren't lending, perhaps there may be some foreign banks that could be lending, or perhaps some other investors out in the world.
Do I hear the faint echo of sovereign wealth?
It could be. I think a number of sovereign wealth funds are going to be looking at some strategic or helping some strategic players be able to close some of these deals. These are not small deals. Now, with the small middle market deals, banks are lending to them if they have a relationship with them, and it's based on their own balance sheet, which just basically means the bank is using its own money. It's not going out and syndicating the debt.
How's that business? How's that the loan syndication business still tight?
It's very tight. If banks aren't loaning to each other, they're not doing deals. They're just taking a wait-and-see attitude. That's what's happening right now, and that's going to hurt, at least for the near term, the M&A industry.
Okay, we're going to have to leave it there. I want to thank you very much, Roger Aguinaldo, coming and talking to us about M&A from M&A Advisor, the CEO. Thank you for your thoughts and your reaction to the Business Council meeting. Appreciate it. Thanks very much. Now.